my dear students, welcome back to accountancy class. In the previous session, we were studying about the journal entries, how to pass the journal entries. Now you are able to pass the journal entries for various transactions, right? Today we will study about some adjustment journal entries, okay? What do you mean by adjustment entries? Adjustment entries are passed at the end of the accounting year to make adjustments in the accounts so that final accounts show true and fair financial performance, that is profit or loss and financial position of the business. Okay, these are discussed in detail in the chapter of final accounts. Today we will discuss about some important adjustment entries. Okay, let's discuss the journal entry for closing stock. Do you know what is closing stock? Closing stock means stock of unsold goods at the end of the accounting period. It is brought in the books of accounts to determine correct gross profit or gross loss. The journal entry for the treatment of closing stock is closing stock account debtor to trading account. So what is the journal entry for treatment of closing stock? Closing stock account debtor to trading account. This closing stock will be transferred to the trading account in order to find out the gross profit or gross loss. Now the second one, outstanding expenses. What do you mean by outstanding expenses? These are the expenses that are of the current year but have not been paid till the year end. Okay, so it is the expense of the current year but have not been paid till the year end. It is a liability. Outstanding expense is a liability. The journal entry for outstanding expense is expense account debtor to outstanding expenses account. Okay, for example, if it is outstanding wages, then the journal entry will be wages account debtor to outstanding wages account. Clear? Now, let us discuss about the entry for prepaid or unexpaid expenses. What is the meaning of prepaid expense or unexpaid expense? These are the expenses paid in advance. Okay, actually it is treated as an asset for the firm. Okay, so what will be the journal entry, do you know? Prepaid expenses account debtor to expenses account. So if it is prepaid salary, then the journal entry will be prepaid salary account debtor to salary account. Okay, next one, what is that, do you know? Accrued income or income earned but not received. What is the meaning of accrued income? The income which has been earned but has not been received or has not become due is called accrued income. Okay, so it is actually it is an asset for the business. Okay, accrued income is treated as an asset for the business. What is its journal entry, do you know? Accrued income account debtor to income account. Okay, what is the journal entry? Accrued income account debtor to income account. Okay, so the next one is, what is the next one? Income received in advance or unearned income. Income received in advance or unearned income. What is its meaning? Actually, it is the income received but not earned. Okay, is known as income received in advance. Its journal entry is income received account debtor to income received in advance account. Okay, if it is rent received in advance, then the journal entry here will be rent received account debtor to rent received in advance account. Clear? Our next item is depreciation. Due to use of fixed assets like machinery, vehicle, etc., its value decreases every year. This decrease or fall in the value of fixed assets is called depreciation. Do you know what is the journal entry for depreciation? Depreciation account debtor to fixed assets account. If it is depreciation on machinery, the journal entry will be depreciation account debtor to machinery account. If it is depreciation on vehicle, the journal entry will be depreciation account debtor to vehicles account. Clear? Our next item is interest on capital. What is capital? The funds invested by the owner in the business is called capital. Okay, interest is allowed on capital to determine the correct profit or loss for the year. The journal entry for this interest on capital will be interest on capital account debtor to capital account. What is the journal entry? Interest on capital account debtor to capital account. Our next item is interest on drawings. What is the meaning of drawings? Drawings means amount withdrawn by the owner from the business for personal use. Okay, interest is charged on drawings to determine the correct profit or loss of the business. Okay, so do you know what is the journal entry for this interest on drawings? The journal entry of interest on drawings is capital account debtor to interest on drawings account. Once again, capital account debtor to interest on drawings account. So, dear students, today we learned about 8 adjustment journal entries. Okay, study these journal entries very well. Thank you.